X equals Y, the return is true. Financial advice made for you. Money in your wallet you can take to the bank. See the market climb with your credit rate. Money's tight, you don't need to worry.
You got that right.
You're on the money. When the time is right in the market trend, put your money in stock, got a dividend. Invest in stock and capital gain. Take a ride on the gravy train. Times are rough, you don't need to worry.
You got that right.
You're on the money. Got TNT in your IRA, put some away for that rainy day. Listen good and I'll tell you how to invest with NASDAQ and the Dow. Money's tight, you don't need to worry.
You got that right.
You're on the money. Life's getting better like the lottery. Got peace of mind and security.
Hi, whoops, Aidan Doyle back with you for episode 2, let me get it straight, of the fall season of the On The Money show. This is going to be a good one, ladies and gentlemen, because I am going without my board, which for those of you that watch me regularly will know my format is walk you through a subject, make notes on the board while I'm doing so, and basically try to give you a bird's eye view of what we're looking at and make it understandable and speak to you in a language you can understand. However, today's subject is something I've wanted to do since the show was conceived back in 2009. Today's show is gold. That's right, the precious metal, gold, that man has lusted after, that defines his greed and his aim for success throughout the ages. So, we're not going to go with the board, but we're going to go with some notes. Before we start, I want to just make a few announcements regarding the show, which is what I do every time I do the show. It just gives me a forum for me to tell you what's going on. I know I can do it on the web pages, on Facebook, MySpace, Twitter, and on the company website, or the show website, which should be underneath me as I speak if my people are doing their job correctly in the control booth. Okay, first things first, we are getting a reasonable amount of success as far as the show is concerned. All right, we started this back in 2009, as I've indicated. We are in our 3rd season, and I'm going to say conservatively that whoever you are right now in viewerland, whether you're in New York, Eastern Seaboard, West Coast of the States, Ghana, yes we do get broadcast in Ghana, Australia, the UK, seeing a lot of action, that's the word, from the Middle East. You guys are putting us guys on the map. We want to thank you for that. Stay put. I want to thank a few people for that specifically. We have hired a public relations expert, Tangi Davis of iMerge PR. You're responsible, sweetheart, for getting this show firmly on the map, and I want to thank you for that. Now, without further ado, without any more plugs, let's look at gold. Okay, when I do most of my shows, I have a kind of game plan as to what I'm going to write, why I'm writing it, and how I'm going to break it down, quote unquote, for the, let's say, less than sophisticated viewing audience. Obviously, gold is out there as a word or commodity that everyone has had contact with, everyone understands. You don't need me to tell you what gold is, but you do need to know a few things that the less than sophisticated investor probably won't be familiar with. So, let's do the definition first. Let's get it out of the way. Okay, gold is a precious metal, of course, goes without saying, but I just want to put it on the record. There are 4 big ones: gold, silver, palladium, and platinum. There's a few more obscure metals, iridium, palladium, stuff that you won't necessarily ever have to come across, but as far as the group is concerned, that's the big 4. Okay, the ones that you will have seen every day, all day, in the news, in your life, and practically are obviously gold and silver. We're not talking about silver today, we're talking about the big guy, gold, and I'm going to tell you why you guys may decide to put this or tag this show, because knowing how gold operates, how it interacts with the financial marketplaces in the world, and what you don't know about investing in it could make you a bit better off. So, let's get started with the definitions, okay? I'm not going to tell you what gold is. That's for, you can do that in your chemistry class, but I will say that in its purest form, which is 24 karat, it's pretty much nothing more than a precious metal that you invest in. It has a few practical applications, I think in dentistry, and strangely enough, and when I researched the show, gold is used for medicinal purposes. Do you know that, ladies and gentlemen? I didn't know that. Apparently you can swallow it, you can eat it, and you can inject it. It's supposed to be something to relieve the, let's say, the debilitating effects of tuberculosis. Go figure. So you can have a gold, you can have gold therapy. However, if you're going to have gold therapy, I'm not a show for that. I'm about financial therapy. So let's look at gold as an investment. And let me tell you something that I always try to interject in my show, which is there are a lot of, the gold markets, the precious metal markets, are very unlike any other markets because they're a physical commodity. In other words, you can buy gold, obviously, put it on the back of a truck and drive it home and you own it. You can't do that with shares, you can't do it with currency, well you can do it with currencies, but then that's cash. You can't do it with options, and most of the other instruments you physically have title to it, but you can't pick it up and walk out the door with it. Okay, here's the practical aspect to owning gold. I'm going to talk about whether you should do it or not in the context of the marketplace, but how many ways can you buy gold? How could you effectively benefit from price movement? There are 2 or 3, here they are very quickly. The physical coins, the bullion, the things you see on the CNBC commercials, the actual units of currency, the more famous of which is the Krugerrand. You can buy those from companies that will sell them to you and give you a quote, and you can pretty much put them in your safe deposit box, under your mattress, and you can physically own them. A lot of people go that way. I think it's probably a good idea as long as you are adequately insured. But then again, it gets a bit impractical when you start talking about lots of coins. Realistically, you probably won't have enough money to buy enough to have to worry about where you're going to put all the coins. But for those people that are investing significant amounts of money, such as institutions, practical aspects come in. I've said you can buy the physical gold itself. Obviously, coins, bullion. Bullion is just a crude way of saying untreated gold, the actual bars that you see in the Federal Reserve. You can buy those bars, or you can commingle your funds with other investors to buy those bars, and you can literally have the Federal Reserve or the bank or the depository institution hold those bars for your account. So we know you can buy the coins, we know you can buy the bars, but in the real world, no one does this. In the real world, what people do is they will buy stock or an interest or an option in the price of gold in the marketplace. I'll explain that very slowly. You're not buying the gold, you don't own a piece of gold, it's not in your house, it's not in your safe deposit box, it's not in your floor safe, it's not in a cabinet in your house. What you have is a piece of paper that says you have the right, or you have an underlying option to buy gold at a certain price. Naturally, when you own that option or right, if gold moves up in price, that means your option should do exactly the same thing, move up in price, and it's a leverage play. That means if gold moves up 30%, for example, your investment would probably move up about 120. I did a show, I'm assuming the viewer has a knowledge of leverage, perhaps erroneously, but to my credit, I did a show, had to be last year, called Other People's Money, How to Use Leverage. If you're getting a bit stymied by the use of leverage, you can take a quick look at that, or you can do many other things such as Google it or ask a colleague, etc. But leverage means that you get more bang for your buck. Okay, walking you through these very quickly. As I've said, this is from here. I do not have my board, I don't have any notes, but this is kind of basic instinctual 101 for me because I've traded the metals for years and years and years. Okay, you can buy the physicals, you can buy the bullion, the coins, you can buy the options. You can also buy what's known as futures contracts. Thank you. Futures contracts are a long way of saying you have bought the right, it's the same as an option, but it's just a slightly different market. You bought the right to buy gold up until, let's say, the end of March for, using a notional figure, $900 a troy ounce. That means, logically, given the same rationale I've just explained, that if gold moves up in price, your options become more valuable.